Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. Let's kick it off. AMC closed at 493, up 0.41% on about 20 million shares traded. The APE, $1.79, up 0.56% on 7.8 million shares traded, bringing the consolidated price of AMC and APE to $672, up 0.45% on 27.8 million shares traded. Now, based on that last price of 493, Monday, be expecting support to the downside at levels 481, 468, and 455. To the upside, be expecting resistance at points 507, 520, and 533. Now, when I'm trying to call the short-term direction of a stock, I'm looking for trends and reversals. I start with the big index that we belong to, in our case, the New York Stock Exchange. Then I narrow to the ETFs that hold us. Then I want to narrow to the sector we're in, entertainment, and then drill down to direct competitors like Cinemark. Here are some interesting things I discovered. For example, the ETFs that hold AMC, all of them are in the green. VEA, VXUS, SCHF, VB, and VBR. VBR is up 14% over the past 3 months. AMC is down 16.72% over the past 3 months. And then when I take a look at our competitors in our sector, which include Royal Caribbean, Cinemark, Live Nation, Carnival, over the past 3 months, of course, AMC is down 16.72%, while Royal Caribbean is up 44%. Cinemark is up 6.8%. Live Nation up 30%. Carnival up 82%. Over the past 6 months, AMC is down 18.91%, but Royal Caribbean is up 51%. Cinemark up 39%. Live Nation up 9.94%, and Carnival up 5.42%. And what about Adam's old firm, Norwegian Cruise Lines? Well, over the past year, it's up 38%. At some point, we're going to have to stop blaming just the predatory short hedge funds and the inaction of the regulators and start holding AMC's management team responsible for our stock price. And now it's official. As of Friday's close, AMC remained on the New York Stock Exchange list of threshold securities. So what's that, 43 calendar days? Let me sum this up for you. I think it's bullish we're on this list again for a protracted period of time. FINRA will do nothing about it. The SEC, who actually tabulate these statistics, will do nothing about it. The New York Stock Exchange will do nothing about it. And other than tweeting, Adam Aron will certainly do nothing about it, which in my opinion adds to a long list of breach of fiduciary duties. But look on the bright side. It just adds to a mountain of evidence against Adam Aron, his management team, and his board, which could result in the most epic class action lawsuit to ever hit Wall Street. I love being on this list because the optics are horrible for the regulators covering up these crimes, and this kind of stuff can attract speculators. Okay, guys, take a look at the chart on the right. That's the FTDs year to date. They are spectacular. This is not our problem. They're going to have to figure out how to sweep this whole thing under the rug again. And of course, Adam Aron takes to Twitter. Many of you are incensed by the high number of failed to deliver AMC shares. And then AMC again has been on the threshold list for multiple weeks. We repeatedly have gone to the New York Stock Exchange and FINRA and did so again in July to put and keep this entire situation on their radar. All right, guys, a direct quote from a Frank Nez article of Adam Aron. Don't believe everything you read on Twitter. Yes, it's true that we have a lot of short sellers who have sold our shares short, But all that stuff you read about market manipulation and fail to delivers and all this other stuff, there's billions of synthetics out there. That's not our problem. Guys, take a look at the chart on the left. We haven't had one day since June 27th where FTDs were under 10 million. Okay? Look, the one person I don't believe on Twitter for sure is Adam Aaron. Now, this is the Adam Aaron we've all come to know. Candidly, I've seen no evidence so-called fake or synthetic shares exist. But many of you disagree. This preferred equity dividend goes only to company-issued shares, so it will have the impact of a, quote, share count or unique dividend many of you have sought. Hashtag, today we pounce. Oh, I love those hashtags. You see, Adam sold us the APE dividend with two distinct benefits. One, to raise money, and two, it would act like a share count. Like the 6 share counts he said he ordered but never put on the investor relations website for us to see. Since Adam went to Harvard, I wonder if he can do this math. 3.8 million shareholders times 300 shares on average each, that's 1,140 million shares, not including any institutional holders. Look, I've never said Adam doesn't want the company to perform well. How else can you pay those outrageous cash and stock bonuses even during the pandemic and during a famine of movies from Hollywood? But if you still think this guy is on your side of the shareholders, then hashtag you're a sucker. Now let's kick off our analysis over at Maximum Pain. I'm really getting excited about Monday and Tuesday. Max Pain stands at 5, but the put call ratio is now up to 2.4018. The put call ratio is calculated by dividing the daily volume of traded put options by the daily volume of traded call options. Now on August 3rd, 11:04 Eastern Time, an unusually large block of put contracts in AMC was bought. $1,160,000 with a strike price of $4 a share, expiring in 43 days or on September 15th. Now, these are contrary indicators. A buy signal is generated when too many people are buying puts. A sell signal is issued when too many people are buying calls. So what does our chart look like, Uncle Frank? Based on this 30-day put-call ratio chart from Alpha Query, you can see by the red arrow, I'm expecting some action over the next 2 trading sessions. Now, cost to borrow may not be 1,000 anymore, but I only see 100 shares left at a fee of 210, up from a fee of 169.4. Still, elevated cost to borrow to short this stock. So let's do a quick headline check from Reuters. Update: One Cineworld emerges from Chapter 11 bankruptcy. From Business Wire, AMC Theaters posts its best admissions revenue week in the company's 103-year history. From Barron's, Cinemark stock rises on earnings beat. Enthusiasm for cinemas strong as ever. And from Zacks, Cinemark beats Q2 earnings and revenue estimates. Guys, I like this setup so far. We didn't hear anything from the judge Friday. The company has never done better. We have a 2-quarter runway of cash, probably improving as we speak. If we could get Adam and his management team to suspend these outrageous cash and stock bonuses that actually exceeded their base salaries, at least until the company is out of danger, or even until the end of the year, we would recover much quicker. But there's no chance of that. Plus, we're on the threshold list. Cost to borrow is elevated. FTDs are through the roof. Another Friday worth of puts got vaporized, stemming from this stupid ARB play. And guess what else? We've got our earnings call coming out after the bell on Tuesday. Uncle Frank is sending in questions like, how many credit cards were approved so far? How many items did we sell out on the merchandise website? How did retail popcorn perform at Walmart? Did we sell out any stores? Will the Walmart by my house ever get the popcorn? Are we close to selling our popcorn with more than just one retailer? Oh, and I have to ask a question on behalf of the Adam Aaron fanboys. Do you remember when Gordon Gekko gave his speech at the shareholder meeting when he accused them of having no stake in the company? Well, since Adam, his management team, and our entire board of directors haven't purchased a single share of AMC in over 5 years, but actually sold $1,055 million worth over the same time period, I have only one question. Is there even one board member or management executive that thinks AMC has a good future? Is there even one of all of you that will jump into the trenches with the people that save the company, pay your outrageous top 5 salaries, including cash and stock bonuses? I'm just curious. Now, guys, this is the most important slide of this presentation from CNN Business. Blockbuster Heatwave helping drive summer movie box office. And from Fortune, it's not just Disney losing customers. Nearly 2 million people stopped subscribing to Warner Brothers Discovery's streaming service. But here's the one we've got to pay attention to. From CNBC, Barbie is less than $100 million away from $1 billion box office heading into third weekend. From the article, heading into this weekend, Barbie has tallied $916.1 million. It's expected to hit the coveted $1 billion benchmark before Monday. In doing so, director Greta Gerwig will become the first solo female director to have a film cross 1 billion globally. Okay, guys, Monday morning, if Barbie is over $1 billion, that's going to be one hell of a headline to go into our earnings call on the following day. And moving over to Swan Watch, BRICS Summit 2023, the quest for a new world order. As uncertainty surrounds Putin's attendance at the upcoming BRICS Summit, discussions of a new BRICS currency reflect their pursuit to challenge the dominance of the US dollar. Well, let me take away some of that uncertainty. Putin ain't going because he would be arrested on the spot. But this is happening this month in Johannesburg, August 22nd to August 24th. And from Fortune magazine, the hedge fund titan, who's been watching for black swans for decades, says the greatest credit bubble in human history is set to pop. But he's not worried. And then from Reuters, Russia says JP Morgan stops processing its grain payments. The United Nations, the U.S. State Department, and JP Morgan declined to comment. And this is in front of the BRICS meeting. And you guys wonder why I'm an XRP nut. And from Reuters, equity hedge funds get crushed by bearish bets in July. Yeah, we're just getting started, bitches. From the article, global long-short hedge funds, those that bet stocks will fall or rise, were forced to unwind bearish bets that were dragging down performance in July, a Goldman Sachs report showed on Monday. Long-short funds are on track to post the worst monthly so-called alpha performance since May of 2022, which considers gains in excess to benchmark indexes. Losses were mainly on the short side of portfolios, but Goldman, one of AMC's huge spoofers, saw a meaningful deterioration in long side too. Stay tuned, because this month is going to make last month feel like a Swedish massage. And here's a fun headline from Reuters. UBS lays off Credit Suisse investment bank staff, closes Houston office. I want you apes to know you beat a 167-year-old Swiss bank. You didn't lose. They just don't want to pay you. And what's going on with XRP? From FX Street, Ripple whales dump 100 million XRP as XRP price suffers the waning bullishness of SEC lawsuit win. From the article, XRP price has declined by almost 25% in the span of 2 weeks after marking 2023 highs of 85 cents last month. Whale addresses holding 100,000 to 1 million XRP have sold more than 100 million XRP in the same duration to take profits. This profit taking might come to a stop now and reignite accumulation amongst investors as the altcoin is currently in the opportunity zone as per the MV/RV ratio. And another headline, Ripple XRP corrective phase could be over. Can price break $1 next? But my favorite so far, Wells Fargo, bullish on XRP, predicts $100 to $500 price range in the next 7 months, cites utility as a main drive. I will never tell you to buy, sell, or hold any stock or cryptocurrency, but I am accumulating XRP on this dip. Now let's get the recap out of the way from Wall Street Breakfast. Stocks closed lower Friday to cap a volatile week that finished with losses after Fitch downgraded its U.S. credit rating below the top AAA level, which launched U.S. Treasury yields on a wild ride. The 10-year Treasury yield swung nearly 13 basis points lower to end the week at 4.06% after briefly climbing to about 4.2% earlier. Friday marked the final day of the busiest week in the second quarter earnings season, with Amazon jumping more than 8% to its highest in nearly a year following a strong beat and raise, while Apple fell nearly 5% after reporting lower revenue than the year earlier quarter. Quote, during the week, the market shrugged off a ratings cut for U.S. sovereign debt, so we suspect it will survive a muted outlook from Apple too. Our house view on each of the indices suggests a little more downside in the near term before another push up towards all-time highs later in the year. Alex King from Cestrian Capital Research told Seeking Alpha for the week the Dow dropped 1.1%, the S&P 500 slipped 2.3%, and the Nasdaq tumbled 2.8%. Now, we're the biggest story as far as I'm concerned next week, but starting Thursday, you're going to get a look at initial jobless claims, core CPI, CPI year over year, and then on Friday, producer price index, core PPI, year over year PPI, and consumer sentiment. Guys, this argument is getting kind of old. Now, if I were a predatory short hedge fund and I was over my skis on a short trade, or to put it another way, if I were forced to cover, it would be a catastrophic event. Let me tell you what I'd want exactly. I would want you to convert APE into AMC. Then I would have millions of freshly minted AMC to cover with. You see, APE would go from being a like security to a real locate. I would want you to mass dilute it as opposed to a little at a time so I could buy it cheaper. Then I would love a reverse stock split so I could cover for pennies on the dollar after I drive it down into the dirt again. And the best part is the reverse split would conceal my crime by eliminating synthetic shares. If they exist, of course. Adam says there's no such thing. Now let's review exactly who designed this plan, beginning with the alleged rigged vote, the conversion, mass dilution, and reverse split. This slide depicts the team that Adam Aaron himself put together to handle all of that, which resulted in the class action lawsuit in Delaware. Now, the yes voters are mad at the no voters. They're mad at the judge because this all went sideways. But shouldn't they be mad at whomever designed this plan and didn't research to see if it was all legal? I mean, they call it a frivolous lawsuit every day, but you don't settle frivolous lawsuits for $130 million. They're settling that with your money. They're taking money out of your right pocket and putting it in your left pocket, but it'll be worth much less. So let's start at the top with the leader of our board of directors, Philip Lader, senior advisor to Morgan Stanley Institutional Trading, with a daughter that's in senior management at Uniswap, where AMC tokenized securities were found to be trading. He hasn't bought a single share of AMC over the past 5 years, but sold out near the top. By the close of last year, Morgan Stanley had $123 billion in securities sold, yet not purchased. I want you to know Adam went out of his way to add Phil to the APE Conversion Pricing Committee. And then there's Citi, our own investment banker, the actual underwriter of APE, a short seller of AMC, a company with a sell recommendation on AMC from this month with a price target of $1.65. Does that remind you of Credit Suisse? As of the close of 2022, Citi had $183 billion in securities sold under agreements to repurchase. At this point, guys, we should just hire Citadel to handle this deal for us. And then there's Antara Capital, the guys we gave APE to for 65 cents that were selling 1 million to 3 million APE per day. They're facing federal securities litigation seeking the return of its alleged short swing profits. Now, Antara was launched in 2018 with money from Blackstone. Those were the guys that back in 2015, along with KKR and TPG Capital, agreed to pay, I think, $325 million each to settle litigation alleging they colluded to keep leverage buyout prices low. Let me say that another way. The guys backing Antara were sued for keeping stock prices low. Anyway, earlier this year, Blackstone admitted it was part of the SEC's texting sweep case. And last month, the law firm Scott & Scott is investigating whether members of Blackstone's board of directors or senior management failed to manage Blackstone in an acceptable manner, in breach of their fiduciary duties. Antara is also listed as a current short seller of AMC, and many apes believe that Adam Aron may have colluded with Antara to rig the recent shareholder vote. So let's review who Phil For Real, Bigham's boss, and everyone else trusts on this scheme. Adam and 2 known short sellers of AMC, Citi and Antara, plus a senior advisor to Morgan Stanley Institutional Trading. They all joined to create this scheme, and I'm a shill for not trusting these clowns. You really believe this time the QSIP change is going to work, right? Like Phase 6 and NSCC 2021-010? Guys, we telegraphed this plan. They're expecting this plan. They're counting on this plan. They're not afraid of it, and worst of all, they helped design this plan. If you really think Phil and Adam are going to hurt the interests of Morgan Stanley and every major prime bank and broker out there, then unsubscribe. Teach me a hard lesson. I've been fighting for us and trying to warn you about these people for over a year now. I'm going to close this episode by nominating this article from the Cryptopolitan as the article of the year. I really hope you guys go look up this piece and post it all over Twitter. The headline: SEC Chair Caught in Citadel Market Manipulation Scandal. From the article, SEC Chair Gary Gensler is facing market manipulation accusations by Citadel Securities and Citadel Market Maker. He is alleged to have shorted crypto-focused stocks like AMC Theaters and GameStop via Vanguard Group and BlackRock. The allegations have sparked a Change.org petition demanding Gensler's resignation for his failure to protect retail investors. Now, think this through, guys. Why would Citadel risk a slander suit, from the SEC or Gary Gensler by making these accusations? Well, I have a theory. I think that they're getting a little tired of this short trade with AMC and others like GME, and I think they were going to let Kenny hold the bag. And Kenny wanted to remind everyone, listen, I've got plenty of dirt on you going all the way back to the Robinhood scandal, so I'd be real careful who you let hold most of the bag on this trade. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.